Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for Nasdaq ETF's Cabana Week is Matt Cohen, head of ETF sales specialist team at Principal Global Investors, to discuss Principal's approach to healthcare as a long-term way to access different disruptors. Matt, it's great to see you again. Welcome to Trade Talks.
Thanks, Jill. Really happy to be here.
And Matt, healthcare has had a really good run. Is the trade over at this point?
That's a great question, Jill, and it's a question I hear from investors every day. And I would say we're really in the early innings of healthcare disruption. And why do I say that? There's a lot of different things happening. Obviously, the trend has hastened quite a bit due to the pandemic and COVID. But we're looking for tomorrow's winners in an environment like this as well. When we look at healthcare, when we look at the disruption, you've got to really look at the set of the aging population. Think about it like this. This is a stat that blows me away. Every day for the next 10 years, we are going to have 65,000 individuals turn 65. They're looking at living longer, healthier lives. And more importantly, there's innovations in healthcare that allow for this to take place. What's even really fascinating is spending is 3 times the amount on healthcare than it is in GDP. So investors are spending a lot more money on their healthcare. They're looking to have longer lives. And we have companies, whether it's in the biotech space, the supply chain, medical innovation, it's all there. And that's why I don't think this trade is over. I think it's a long-term trend.
So Matt, what sort of companies fall into the disruptor category?
Well, when you think about the disruptors, you think about it really 2 ways. You think about the companies that are spending in R&D, and more importantly, the companies that are innovating for the future from an M&A standpoint. So, the disrupting technology is taking place from these smaller, mid-sized companies. Okay, and you think about it in 2 ways. The 2 ways I think about it most recently is companies we didn't talk about a year ago. Think about it from the virtual environment. Teladoc's a company that's become a household name. I know my kids have utilized the virtual visit. Again, this was a name in the portfolio. I mean, people in rural areas probably utilized some of the Teladoc capabilities, but today I think more and more people are looking at it. And obviously with COVID and the innovation in regards to the vaccines, you think about a company like Moderna. Moderna's a name in this portfolio. And again, a year ago, probably most people didn't know Moderna. So you're seeing these disruptors in different parts of the structure. And what's interesting about these disruptors, the large companies aren't the ones creating all of this innovation. It's the small and mid-sized companies that ultimately come in, disrupt the technology, and then are actually merger and acquisition targets or partnership targets of these larger companies.
So Matt, how do investors implement healthcare innovation in their portfolios?
Yeah, absolutely, Joe. Great question. And with our product, our healthcare innovation ETF, with the Principal Healthcare's Innovation Index ETF, BTEC, it's 200 names in the portfolio. So a couple of different ways the investors are utilizing a portfolio like this is first that thematic approach. Investors are looking for growth trends in their portfolio. Here's a way to get a thematic play with growth in their portfolios in the smaller and mid-sized companies. Again, the companies in this portfolio on average are less than $10 billion, and they're not typically the names that you would invest in from a smaller name standpoint of building a diversified portfolio. So the core investor looking for that thematic approach. Secondly, we're seeing a lot of institutional investors look at a product like this. It's really hard to sift through the winners and the losers. And what a lot of institutional investors are saying is, I don't want to try to pick 1, 2, or 5 of these because chances are I'll probably get them wrong. So here I invest in the basket of the names. The basket of the names are going to give me some of those winners, hopefully more winners than losers. And overall, it gives me, that approach to the portfolio. Another place we're seeing is actually investors that invest in the small cap space. Small cap investors, typically active small cap investors in the core and value space, tend to be underweighted biotech. They tend to have a healthcare allocation, but they don't buy into a lot of these biotech names because it's feast or famine. So what they typically will do in a portfolio like this is they can buy the basket and get an allocation that way. Other investors, you know, they like to dabble in the individual names, but they don't want to see one of their names go to zero. You know, with companies like this, they fully are investing in research and development. We're looking for companies that are driving innovation, putting their money into that research and innovation, and ultimately, you know, solving tomorrow's problems. That's what this portfolio is built on. So a couple of different ways people are using this innovation, biotech innovation product, BTech, and it's been successful. It's been proven. It's been around for over 4 years now, and it's done what we would expect, adding return to a portfolio, but more importantly, diversifying and bringing down the overall risk.
All right, Matt, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.